In this video, I'll provide a review of the waste management stock and what I personally look for when evaluating potential stock purchases. I'll discuss what waste management do and how they make money. I'll also look at some of the numbers and metrics that could be useful in evaluating the company. My personal goal is to create a dividend portfolio that provides me with a passive income. For me, stock analysis for my goals comes down to 2 points. Does the company have a history of paying reliable and growing dividends? And can the company continue to make profits and therefore pay dividends for decades to come? So who are Waste Management? Waste Management are the leading environmental services provider in North America, with 45,000 employees serving 20 million customers. Waste Management is a company that does just what its name says. They manage waste. More specifically, they deal with the collection, transportation, disposal, and recycling of waste. Revenue is driven from 5 areas: 55% from collection, 21% from landfill, 10% from transfers, 5% from recycling, and 9% from other business sources. So now let's look at each one of the sources in a bit more detail. Collection involves picking up waste and recyclables from where they were generated and transporting them to a transfer station, recycling centre or landfill. 41% of collections come from commercial customers, 29% from residential customers, 25% from industrial customers, and 5% from other customers who all pay a fee for the service. Landfills are the main disposal method for solid waste in North America. Waste Management will basically excavate a site to construct a landfill. Then waste is deposited into the landfill, adhering to strict regulatory requirements, before the site is closed off and sealed. The fees charged at landfills, called tipping fees, are based on factors like competition, as well as the type, weight, or volume of the waste deposited. Transfer stations consolidate waste so that it can be compacted and transported to disposal sites. Waste Management have a network of more than 300 transfer stations where they and third-party haulers deliver waste. These transfer stations act as a sorting and storage facility before the waste is moved to landfill or recycling centres. Fees are charged to third parties to use the transfer station, and the vast network allows Waste Management to effectively reduce transportation costs. This means that even for the companies within the industry that it doesn't own, Waste Management is providing services for them and making revenue from them. Recycling provides customers with an alternative to landfill disposal for many items. Waste Management were the first major waste company to focus on residential single-stream recycling, which allows customers to mix recyclable paper, plastic, and glass in one bin. Waste Management will then market and resell the recyclables that they process. They also provide other services to the customers, such as energy and environmental services. Primarily, this is specialised disposal services for oil and gas, as well as hazardous waste. And renewable energy. Natural gas generated at landfill sites can be sold to natural gas suppliers or converted to electricity, which can also be sold. This gives Waste Management a diverse revenue mix and a large portion of the market share. Waste Management is actually a holding company of 437 subsidiaries. Through these subsidiaries, Waste Management has ownership in 244 solid waste landfills, 5 secure hazardous waste landfills, 102 recycling facilities, and 314 transfer stations. Let's now take a look through the numbers that I find useful in evaluating stocks. Waste Management has a current dividend yield of 2.03%, and last year's dividend yield averaged at 1.9%. So it's a positive sign for dividend investors that the yield has increased. It just means that we're able to purchase discounted income. In fact, Waste Management have increased their dividend consecutively for 18 years. Over the past 5 years, the average dividend per share growth rate was 6.4% per year. During the past 10 years, the average dividend per share growth rate was 5.1% per year. So there has been a more rapid growth in the dividend over the short term, which again makes it attractive to dividend investors. The payout ratio is currently 49%. This just shows the proportion of earnings a company pays shareholders in dividends, and is expressed as a percentage of the company's total earnings. With payout ratios, obviously the lower the percentage, the better. I tend to consider around 80% as being a high ratio. So for Waste Management to have a ratio of 49% is excellent, and strikes a good balance between paying dividends and keeping enough capital back to reinvest into growing the business. Also, if reinvestment opportunities dry up, the company has room to increase the dividend. If we also have a look at the last 15 years of the payout ratio, we see that this number is typical of the company. Over the period shown on the graph, the average payout ratio is 45%, which again is exceptional to see for a dividend investor. The market cap of Waste Management is $47 billion, which classifies it as a large cap company. This is a company with a market cap between $10 billion and $200 billion. I like these large blue chip companies in my dividend portfolio as they tend to be mature, stable organisations, and the dividends tend to be more reliable than smaller cap companies or new startups. Waste Management has a current share price of $111.50, which puts it in the top end of the 52-week price range, but still under the $126.79 52-week high. The 52-week low price of $85.34 happened in March 2020, and the stock has seen a good recovery since then. The current price is attractive to me and looks stable when you compare it to the 50-day average of $114.90 and the 200-day average of $114.68. So now let's look at the dividend history of the company. Waste Management first started paying dividends in 1998, where they only paid 1 cent per share annually for the first 7 years. After that, they've increased their dividend ever since, and the graph shows a clear upward trend. This is obviously very pleasing as a dividend investor, as it shows me that the company is committed to not only paying dividends each year, but also increasing them too. Waste Management were also even able to increase the dividend over 2020. Although this isn't surprising, as with the pandemic forcing people into lockdown within their homes, more waste will have been created during this time, which won't have affected their revenue too much. I think this shows Waste Management to be very durable as a business, and one that I feel could thrive in any economic situation. Everyone needs to dispose of their waste, no matter what is going on in the world. Businesses that can grow their dividends at a steady rate and maintain a consistent payout can generate substantial wealth for shareholders over the long term. Now let's have a look at the chart showing Waste Management's revenue, cash flow and net income. It's all very well looking at dividend history, but we also need to look at the company's earning potential and trends, as the revenue and profits of the company will drive future dividend increases. This is a chart that I find very pleasing. We can see a marked increase in revenue over the last 5 years, which shows me that the company is heading in the right direction. I also like the consistency of the net income line, which just shows that the management have the costs under control. The profit margin is currently around 10 to 11%, and this is in line with the average of 10% over the last 5 years. A good margin will vary considerably by industry and size of the business, but as a general rule of thumb, a 10% net profit margin is considered average, a 20% margin is considered good, and a 5% margin is considered low. The cash flow has remained consistent too during this period, averaging around a $1.7 billion cash inflow each year. Again, this is great to see, as at the most fundamental level, a company's ability to create value for shareholders, either through business growth or dividends, is determined by its ability to generate positive cash flows. So, for Waste Management to have a consistent and reliable level of cash inflow each year bodes well for the future of the company and the future dividend payments. So what is my opinion on waste management? At its core, waste management benefits from one of the most reliable long-term trends around: consumerism. Consumerism, fueled by a growing population and a growing economy, equals more waste. For this reason, the waste management industry isn't going to go away anytime soon. And the leading company of the industry has even trademarked the industry title and branded it as its own. Waste management has strategically pushed its way into nearly every corner of the industry through the diversified acquisitions and development of landfills, transfer stations, and recycling centres. This has created a real behemoth of a company that will be very hard for any competitor to knock off its perch. Also, it benefits from huge economies of scale. Consider the very minimal cost of picking up a new customer's waste on an already established pickup route. They're also committed to a greener and more eco-friendly future. Their primary environmental goal is to reduce greenhouse gas emissions while protecting the environment. Currently, the services they provide avoid 3 times more greenhouse gas emissions than they actually generate, and they aim to reduce this by 4 times by 2038. They also have a 2025 goal of having 70% of their vehicle fleet using alternative fuel sources. They are already making great strides, as 100% of their energy at waste management controlled sites is renewable. Also, 62% of their 32,000 plus strong fleet run on natural gas. Alongside the obvious environmental benefits, I think this is an important move to make as a business, as if they weren't so committed to a more eco-friendly future, this could damage the company reputation and allow competitors a chance to steal some of the market share, as some customers may prefer to use greener services. It's good to see that they are leading the way again in this respect. Overall, waste management has a solid history of growth, pays a reliable and growing dividend, and has excellent company fundamentals. In my opinion, they would make a great buy and hold stock in a dividend growth portfolio. I currently hold 4 shares of Waste Management, but plan to keep purchasing many more shares in the future. Remember that this isn't investment advice, and you should always do your own research and due diligence before making any share purchases. I hope that you've enjoyed the latest video in my stock review series. If you have, please like the video and subscribe to the channel to make sure that you don't miss out on any future videos. Please also feel free to check out some of the other stock review videos I've done on my channel. Also, let me know what stocks you'd like me to review in the comments section below. Thanks again for watching, and I'll see you on the next video.